Welcome to another stock analysis video performed by MajesticTrader.com, where active traders seek greater profits. So let's begin. Hi everybody, welcome to another weekly video analysis by MajesticTrader.com. This is Ron Lang. As usual, we are going to start off with the S&P. We had a pretty good week this week, as you can see here, and we went right into the target range of where we expected to be trading. Topped out around 1353, 1354 before we had a sharp pullback today, and part of that was based upon some of the Greek fears and the Greek news and what they're agreeing to or not agreeing to, so on and so forth. But you know, as we had mentioned in several weeks and in our newsletters, we've been looking for an expected pullback in the market, and at this point we've identified two targets: a 3% and a 5% pullback in the market. And a 3% pullback takes us to the 1311 to 1318 range. A 5% pullback from our peak here takes us to about 1280 to 1290 range. And both of these ranges actually make sense if you could take a look at the support demand area here and the support demand area here. It makes sense that we would pull back here just as a healthy retrenchment in the market. So what we're looking for here is even with that great run that we had to begin 2011, I mean, we have not seen this kind of a steady rise, and typically harder to fall. So one thing that we'd like to do here is see a nice little pullback here, and for the Fibonacci people out there, maybe about a 23.6 to a 33% pullback before we take the next leg up. So we're looking, at a 23.6 or a 38.2% pullback before we take our next leg up. And then don't forget, we still have a lot of overhead resistance here before we break that 1374 two-year high, actually almost a four-year high at this point. So one of the things that we want to look at here is, let's see how the volume is, how steep the decline is first of all. The slower the decline, will probably hit the 5%. If it's a steep decline, we'll probably hit the 3% in the next 2 weeks, as we expected. Let's look at our market leaders. We're going to start off here with ExxonMobil. As we showed you in the prior videos, we were looking at some of these timed movements of the stock price. We were looking on how long it took to basically pull back before it went higher. So we got our pullback as we expected within this time frame, and then we went higher here. You can see we closed at 83.80, right around that 50-day moving average here, which is this blue line. So one of the things that we're looking at here is if we can hold this, we should probably stay and meander within this support resistance range here, depending on how you want to look at it. If we pull back, we might pull back to the $80 level, and at worst the $74 level here. If we pull back to $74, that means we probably had a 5% retracement in markets. Apple keeps chugging along. The one thing that bothers me about this is that we blew right through our target here. Our next target was 505 to 510. Look how steep this climb is, folks. Since it's traded outside the Bollinger Band, I'm looking for some type of a mean reversion, maybe somewhere in the 450 to 470 range over the next couple of weeks as we get pullback. IBM had some pretty good price action, a healthy pullback here. I still think it's going to come back to the 185 to 186 range before it takes its next leg higher. IBM makes up 11% of the Dow, so I'm looking for IBM to pretty much lead the way there. Microsoft had a terrific run here over the last couple of weeks. You see that we actually hit our target that we identified a week ago. So we're looking for a pullback here, maybe to the 29.50, 29.75 area here before it either stays range bound or goes higher. I don't see a complete pullback here to the $27, $28 level. Again, if we get that probably means with a 5% pullback. So let's look at Walmart. Walmart, we're looking for a pullback to the $60 level. Looks like we almost had it here this past week. I still think we go lower before we go higher. And you could just see the action that we've had here over the prior months. And you could see here that we are due for this pullback here pretty much to this range here at 60.87, 60.75, and then we go higher here to possibly $63 if we continue the uptrend going into early mid-March. Chevron here has had some interesting price action, almost hit our price target here, but it looks like it's poised to pull back to the 102, 103 area here before it goes higher. But I think we're going to stay range bound between 100 and 108 for a little while. For a little while here, many of the energy stocks have been getting beaten up, so we'll have to see what happens there. Google has terrific rally since its drop after these earnings. Came right down into this demand support area here a week and a half, 2 weeks ago, and came right up to this resistance supply area here around 612. Had a pullback. I think we still see additional pullback here, probably to this 585, 590 range. Looking at Procter & Gamble, still looking at a pullback here, probably to the $61, $61.50 level. I still think we see some gradual pullback in the market here. If we get that 3 to 5% pullback, we should have no problem pulling back here, and this would be a terrific buy zone right here at 61, 61.50. You might want to put that one on your radar. AT&T has basically been range bound here over the last couple of weeks. You could see if we're looking at the top range here at 30.69 and the bottom here around $28.86 to $29. We're right in the middle of that. I expect AT&T to go higher to the 30.50 level. The reason for that is they are a cash cow. Not only that too, but they're paying a great dividend. So if we do see a pullback here in 3 to 5% of the market, yes, AT&T might pull back, but you're going to see that it won't pull back as much as the rest of the market because people will be diving into AT&T for its dividend yield. GE, you can see really nothing's going on here. We came right up into the supply resistance area here, and it stayed range bound. With a 3 to 5% potential pullback in the market, here's your kill zone. You might want to get back in around the 18.25 level here, but you can see there's next to no movement at all in GE. It increased its dividends, so a lot of people just aren't selling their stock, which is a good sign. So you want to buy on any weakness with GE. Coke pretty much is doing nothing. It's staying range bound here, as we've talked about in previous weeks. If it comes back down to the 650 level, perhaps that's a buy. You might even see it pull back as far as $65. With the kind of market that we had over the last month and a half, Coke didn't really participate in it, and I think you have to look for this to go lower to the $64, $65 level before you should consider going back in. McDonald's had a little bit of a pullback here, and as you can see on this chart, we have been staying completely in this channel, and we finally hit the bottom of that channel, bounced off of it again. I'm looking for it to now go higher. If it breaks this channel with the 3 to 5% pullback in the market, you could see a pullback all the way to this $93, $94 level. If it gets back here, you want to buy on any weakness. McDonald's is getting stronger and they're starting to pull away from the competition. Caterpillar actually had some interesting action. Pulled back to the supply resistance area, which became new support, and hung there. Caterpillar is a significant Dow component, so if we get a 3 to 5% pullback, you might look for a pullback here to the 100, 102 range here. If it's a 5% pullback, maybe to 95, although that would be a significant pullback. I think a 102 to 105 range would be a good area to potentially get back in. Home Depot has pretty much stayed at the top of their channel, and we're looking for a pullback here to about the $44 level. One of the things that we want to look at here is how is this stock going to react on a pullback? Well, you can see it's pretty much stayed range bound, hasn't really been able to get over this 45.75 level. I look at pullback here maybe now down to this $42, $43 range. By people not selling hard over the last couple of days, nobody's giving up this stock either. They're piling in here, expecting the recovery. I do expect some sell-off if there is that 3 to 5% pullback, I think you buy on any weakness here with Home Depot. The transportation's pulled back to our range that we set up. We think it goes a little bit lower, perhaps to the 5175 level, to the 5200 level. Anywhere in this range, I think you're going to look for a bounce up to our measured move as we've identified here on the charts. So again, these transportations are definitely signaling the direction of the market. You can see we've had a downtrend here over the last week. I think the market continues over the next week to show a lot of weakness. And then again, give it about a week to exhaust itself. We gave you the key levels on the S&P to look forward to. And those key levels on the S&P, again, is 1311 to 1318. And then again, 1280 to 1290. So any one of those levels there, you might want to nibble here around 1311 to 1318, and then you might want to really start putting in a larger position down here. Thank you for attending another MajesticTrader.com's stock chart analysis. Visit our website to request one of our newsletters. Go to our website at www.majestictrader.com. In the upper right-hand corner, put in your email address and your name, and we'll send you out a copy. Once you become a member, you'll have access to complete trade performance, all stock analysis videos, archived newsletters, and midweek alerts that are trading ideas. We'll send those out to you via email. Again, thank you for attending.